All right, traders, welcome to today's recap. This is Christian from Tribeca Trade Group, and it is Thursday, July 8th. So, almost done with the week. We got one more day. It's going to be probably another interesting day, I would think. That's probably my only prediction for tomorrow. Risk disclaimer in front of you. Everything that we're going through here is for information purposes only, not giving out any advice or recommendations. This video is for education purposes only, and if the the screen is a little bit blurry, just give it a little bit more time. YouTube does take a little while to render the high definition version of the video, so just give it a little bit of time. All right, so let's talk a little bit about today's price action. Well, I'm going to give it to you as plain and straight as possible. The indices, number one, were extended coming into today. So what happens when we get extended? Well, sometimes the market comes down. So that's kind of what we got for the day. There was also some pretty weak international markets. I don't even know why exactly. It doesn't matter. You don't always have to find the why in the markets, but the European markets were really weak. Asia was also the Chinese markets were also very weak last night too. And again, look at the difference between their markets and our markets. Right, Euro stock was down 2.1%. The DAX was down 1.7%. And this improved a little bit right at the end of their session. But, again, the reason why I point some of these things out and we go over this in the TTG pre-market session every morning is because there is a huge emphasis from U.S. retail traders on just the U.S. markets rather than the global markets. They do operate together. Sometimes what happens in China or in Europe will definitely affect the U.S. market. So that, I think, if you look at the market, what happened in Euro stocks from 4 in the morning on, it was a pretty steady decline. So that's kind of the number one, reason I think that we had a little bit of volatility. But, this is what happens in markets, right? We go up a lot, we get extended, and we come in a little bit. So I always get questions and so forth, and, this is perfectly normal. But I always get the questions on the down days. Why are we down today? Well, I didn't really get much information on why we've been up the last 2-3 weeks either, right? So you have to remember how markets function, right? They go up and they go down. Now over time, right? I say this in a lot of these videos. Generally, they go up, but on a day-to-day basis, anything could happen. But if you came in today and you're asking yourself, oh my God, why are we down today? Look at the last couple weeks. Why were we up the last couple weeks? Right? Well, you don't have really a reason for that either. But what we do know is we got pretty damn extended, right? In the Nasdaq, right? The RSI, and if you don't know what the relative strength index is or how to use it, Google it. You'll find out in about 30 seconds when you go through the definition. But we were a 75 RSI. I mean that is really overheated, right? Now it's very difficult to tell when this is going to actually break. And if you look at the if you look at the price action in the Nasdaq today, only down 60 basis points, so really not that big of a move. All right, so that's and the RSI is back to still is kind of in pretty overbought territory. It's a 69. 70 is officially overbought, but and as a trend trader, so I'm going to talk about a couple things here, right? Just about overall stuff, and then we'll talk about some movers and so forth. But if you're a trend trader, right, and that's what I am, I try to follow these trends for as long as they last. I try not to really question it. Sometimes the less information and the less news, right, and the less BS, reasoning that you get on financial media, the better. But my job is to ride these trends as much as possible. And then, once we start to come in a little bit, you're going to lose, I'm typically going to give back a little bit of those gains. You have to be prepared for that, right? You make money on this and you lose a little bit of money on this, right? And you try to obviously put more in your pocket, than you're giving back once the market comes in a little bit. But this has been, if you look at this S&P chart over the last 3 or 4 months. And again, it hasn't been easy because there's been a ton of rotations, but this is a very strong, pattern that we've got going on. So it makes sense that from time to time we're going to come in a little bit. All right. So again, and again, this video is not for advice, but if I were to give you some advice, stop looking for the reason all the time that we're down a little bit. Right? That's not going to help, right? That's not. You have to know that this kind of goes on from time to time. That's it. And the other thing, so there's a really nice statement by Joe Fahmy too, who is an excellent follow on Twitter. During uptrends, it's perfectly normal for the market to pull back to logical support levels. The 10-day, he's using the 20-day moving average. I use the 5 and the 20 exponential moving average, but whatever. It doesn't really matter too much what moving averages you use. And he says, especially when the market gets extended. Get strong entry points and know your time frame. It helps to reduce emotion. He says it perfectly there too. The other thing I would say too, like if, and again, nobody's perfect, right? In terms of if you had too much risk on or so forth. But if this bothers you, like this type of price action that you had today, there's a couple things, right? Especially after a big run, reduce your exposure a little bit, right? Cut down on the number of positions that you have. You can cut down on position size too. So these are the adjustments that we talk about all the time in the trading room. Another thing is reduce your short, if you're trading options and you're trading stock, right, which I do both, right? I trade options and I trade stock. Reduce your short-term options risk, right? Because what happens, like if you're positioned, like if you're bullish and you're positioned with a lot of short-term calls and we get, something like we had today, like a 1% pullback, you're going to lose all that premium, right? It's the equivalent of being at a craps table or a roulette table at Vegas and the number doesn't come up for you, right? Or you have a bunch of chips on the table playing craps and somebody rolls a 7, right? All that stuff, all those short-term options come off the table, right? In one bad roll, right? So again, I'll say those adjustments again. If you had trouble today or if this volatility bothers you a lot and your emotions are running, reduce your position size, A. 2, reduce the number of positions that you have on. And 3, avoid short-term option risk, right? Those are the main 3 things that, again, I'm not giving advice, but those are adjustments that you can make into this stuff. Because, again, this is quite textbook and normal stuff that happens. All right. What else did I want to mention? For some reason, the bonds got a whole bunch of attention today. I don't know why. Bonds have been rallying for a while. So I don't even know. I don't really understand why they're making such of a mention today. But I do think that we kind of ran into some resistance today in the long bond. Right, so this is the long bond futures / ZB and Thinkorswim. We did hit the 200-day moving average, and you could see price didn't really like that too much. We also hit on the 1-hour chart. We also took out another one of these version point of controls and backed away. Now there's more up here, but I think for now this may be a place where a potential reversal could take place, or at least some digestion. Right, and I think already we're starting to see a little bit of digestion. So that's the bonds, and again, I don't know why so many people are getting so much attention to that. A couple things here on the short-term charts in S&P and Nasdaq. Right, so we did break into value, but we rallied back above. We spent some time. You had to be patient this morning with letting this kind of work its way through. And we did move back above. So again, this 4,300 level, which I put out on Twitter a couple times, that'll be the level to watch. In Nasdaq, right, we are still hanging. This was stronger. We didn't even break inside value. Look at how well the MarketWebs value areas provided that support today at 14,581, or if you want to level in Qs, same exact thing, 357.27. So again, these value areas are based on the market profile, right? Volume at price, where the most volume is occurring at price. And what we do is we draw a top of value, bottom of value, point of control around that market profile, and you could see again and again it comes up with really good support, very precise support and resistance levels. So look at that, perfect. All right, another a positive thing about being a little bit lighter into the price action that we're getting is that there's these things. There's when the markets are whipping around as much as they did today, you could really make some money scalping back and forth, right? When we're not doing much and going sideways, it's tougher to day trade. But days like this, there's a lot of good opportunities, even if you didn't want to add risk today, right? And we'll talk about a couple of those things. Also, I have here what we've been talking about now for about 3 weeks, right? This market breadth. Again, what does it mean? In case you're just watching my video for the first time, somebody said to me yesterday that this is the first end of day video that they watched and they really like it. So that's why I kind of go over some of the same things because I know I get some new viewers. But remember, if the market breadth is doing, you could see on the bottom left of the screen, if there's more things that are declining than are advancing, it's a tough stock pickers market by definition, right? And the example that I always give is, let's say you're just randomly holding 10 names and the market breadth has been declining for a couple weeks as it is. You could have 6 or 7 of those 10 names go down and only 3 or 4 names go up. So it's a much harder environment that you're in. The other analogy I say all the time is that when you have this market breadth where things are declining versus advancing, right? It's the equivalent of when you have the wind in your face trading versus the wind is at your back, right? It's a much easier environment. It makes your job easier as a stock picker when the overall health of the market is stronger, right? So again, look at the number of decliners in the S&P today, 438, right? It's a difficult market environment, and it's been that way. So you could rewind the video and talk about the adjustments, right? There's those 3 or 4 adjustments, trying to be more patient, sit on your hands a bit more, wait for this stormy, market cloud in terms of market breadth, wait for that to pass, right? That's one of the hardest things for traders to do is to sit on their hands when the market environment is not good instead of doing the same thing. Newbie traders, they try to do the same thing every day, right? They think that they can make the same amount of money every day. Once you get a little bit of experience, you know that that's not how it works, right? You have to adapt to what the market is giving you, not what you want, right? And you can't go on Twitter and complain about the hedge funds and make excuses, right? Man up. You got to, but you have to understand what the market is giving you, right? Rather than what you want it to be every day. Right? So again, I'm adamant about these things because I hope it helps you. This is something that you need to learn. Right? Is that when the market is when there's more challenging of an environment, declining breadth, you got to step back a little bit. All right, so that's that. Now, where were there some good opportunities in this market? Well, what was particularly interesting, I thought, was something that has been really lagging lately is biotech. It's one of those hints that whenever we see a market decline, and when you start to see biotech go green or come back so it almost goes green, it's a good sign. Right, when and again, we've been very blessed. I don't know if this is just a one-day dip, but usually dips last 2 to 3 days. But when you start, sometimes it takes day 2 or day 3 to see biotech actually come back and start to lead a little bit. So this was a good sign to see biotech, finish green for the day. The energy stocks finished up very. I want to talk a little bit about this too. How tricky this market has been. Right, so. It looks like XLE still finished down, but this is below the 50-day moving average. So we're continuing to see some things break down, some things really kind of oscillate around the 50-day moving average. That's tough. That's tough stuff. That's those markets are really tough. And I've been looking at these industrials, saying that this is tough. The materials. Not able to really turn the corner. So again, I'm underweight these groups for now until they act a little bit better. That's the other way to kind of help too, is concentrate on relative strength, not on, areas of the market that are kind of in limbo right now. And I see a bunch of them. All right, XLF is another one too. Notice this, we talked about this earlier in the week, rallied up to the 50-day moving average and failed. So it's kind of in no man's land right now. right? 200-day moving average is all the way down here, and here's the 50-day moving average. So it's below, and it's also below value now. So, tough stuff. Home builders too, which were the worst performing group, had a strong, here's what's also tough about this market. A lot of areas are not seeing follow through, right? Home builders, you may have kind of, saw this yesterday, nice green bar, and then the bottom falls out. They're down 3.2% today. So again, this is not easy stuff right now, to be in a lot of different areas of the market. And even some of the names that I talked about yesterday, I talked about low volatility equities doing really well. Well, some of these, here's a good example, right? UNP was up 2% yesterday, closed on the absolute highs. How great does that look? Yesterday's close is down four. This was down 4.4% today. Union Pacific. So again, it's just a tricky market right now. So again, it could straighten out in a couple of days. It could straighten out, in terms of not being this difficult. It could straighten out. It could take longer than that. You just kind of have to, watch, observe, and wait, right? Watch, observe, yeah, and basically wait. Be patient for it. All right, because again, I don't have a crystal ball, and I'm not going to predict, when we start to see more advancing versus declining names. So, until then, you have to be a little bit more cautious. So what really worked? Well, if you listen to my videos the last couple days, I've been really excited about this move in Amazon, right? This breakout that we're seeing, right? We finally got this breakout. Right, so I keep getting hounded by people on Twitter that tell me there's a stock split that's coming. There's a stock split. Honestly, this should not be your thinking about why you like Amazon, in my opinion. Now, again, everybody can have their own opinion, and if you differ from mine, that's fine. But that a stock split doesn't make any economic difference in your position. I went through this in yesterday's video, but I'll go through it one more time very quickly. Right, if you purchase something at a store, and you give the cashier a $100 bill, right? Your merchandise cost $80. Do you get more excited when the cashier gives you a $20 bill back as change, or 20 singles? Right? It shouldn't make any difference to you. You probably want the $20 bill so that you don't have the 20 singles. It's the same thing with a stock split. 20 singles equals $20. Right? A $20 bill is a $20 bill. It's still the same $20. Or if somebody gives you 4 5s, do you get more excited because now you have more more paper bills? No, because it's still $20. Well, that's a stock split too. And people seem to think that, oh, well, it's good because people can buy, a smaller amount now. You could go to any one of these brokerages and now buy fractional shares. So that argument doesn't work either. So what is impressive? What is driving this? Well, it's a breakout after a 10-month period, right? And the example, and I don't want to say this with NVIDIA that this is the exact same situation, but look at what happened once NVIDIA broke out of a similar pattern. Right? Now this did come back in back check, and that could happen with Amazon, but look at the volume, right? Look at the accumulation that the institutions had to do once it started to get going. Don't you think that that's going on right now in Amazon too? Or that could take place, right? And the other thing is, it's like we've been talking about now for the last week, it could just run into earnings, right? People know that they're going to have earnings, and probably institutions are going to want to have a position into that, right? So that's why it's so exciting when you look at the NVIDIA chart and see a similar breakout of, getting out of this range and into price discovery. So Amazon is now in price discovery. Now, again, it could do a whole bunch of things in here. It could continue to go higher and then check back. But for me, how I'm playing this is I'm going to continue to buy the dips. And I talked about this in yesterday's video. I said it could go higher, but it's a bit overbought on the 1 hour time frame. And if it comes in a little bit, I'm going to be a buyer. Right? So what did I do today? Right? I put on a new trade, and I already had exposure to Amazon. because I couldn't get out of it yesterday. I couldn't get the price that I was looking for, and spreads that I was already long. But this is my first trade, and I talked about this in the TTG pre-market session this morning. Right, this is I said I was going to go after this. Right, I also added to a couple other things, and then I just had to be patient. Right, because we weren't getting much of a move here in the first, not until the European close, which is kind of what I thought would happen. Then we started to get going. I took a target here, and then I took the rest of this trade. And this one I ended up being a day trade. And then I started to peel. And then I want to continue to roll my exposure because I think that this is a really nice looking move. So I want to keep some exposure on in Amazon and then add on the dips. Right, so that's my plan, right, and that's the majority of trading that I did. I bought some of this SPCE, but not a big portion because this is a really high volatile name. Don't forget, they have this flight that's happening this weekend. So again, what's the principle here? Buy the rumor, sell the news. Right, buy the rumor into this event that's happening this weekend, and then who knows after it will. I would think that it will be buy the rumor, sell the news. So even if the flight goes well, you may see the stock not do much because again, if it runs into it, it's not going to do much, right? Again, you have to kind of get ahead of conventional thinking, right? Newer traders think, "Oh, I'm gonna buy it after if this event goes well." No, it's buy the room. You got to be positioned before the event, and then take the trade off on the event day, or leave the last piece of the trade on if you want to speculate on the actual event. All right, so that's that. What else? Any other names to really talk about? I took off one name too because again, I'm a risk manager. Want to make sure that if we do get more volatility in the next coming days, because of this weak market breadth, I want to be somewhat defensive. All right. A lot of people were looking at this Snow name, Snowflake. This is a name that has been very tough. You got to wait for a break, I think, above 251. All right. All right, guys. So that's it. We'll end the video here. Guys, have a great night. And again, make some adjustments if you had some issues with today and today's volatility, because this is just normal business, guys. And then kind of go from there. If you're not a member of Tribeca Trade Group, somebody asked me on Twitter, they're like, does this mean you buy the dip today? And I'm like, we go over a checklist of things to watch, so that you have a plan every day. Right? Not just running on emotion, right? We don't want to run on emotion. We want to have a trading plan every day. So you go to my profile, click on here. And again, my job is to kind of, not only put on good trades for myself, but I really spend a lot of time and effort, trying to help traders and get them into a good place, and to kind of, especially for newer traders, help them really try to unlearn some of the things that they've been learning on Twitter and on message boards and every other thing. Because, while there's some great follows on Twitter, there's also really like a lot of bad things bad habits people are picking up, on Twitter. So, I'm here to help. If you're looking for somebody experienced to kind of hold your hand through some of these things, and give you a little bit of guidance and show you what I'm doing. So even if you don't want to get involved on days like this, you can kind of follow along and see what see what the trading plan is for the day, and see how I try to tackle every day, and a day where we don't have all the facts, but we're making moves, consistent with, reading the tape and, and analyzing the technicals as well as sentiment. All right, guys, have a great night, and I'll see you tomorrow.